Okay, folks, and we are live. Happy Sunday night. Welcome to the new trading week. And what we're going to talk about tonight are obviously the opening price action of the futures market. We're also going to spend a good amount of time talking about the drivers of the market moving forward. We've spent time in this over the past several weeks. I've alluded to it. I've spoken to it quite a bit. But now the rubber's really met the road, and it's time to revisit the topic. I did it on best stock charts for the new trading week. The game has changed somewhat in 2022, and we're going to talk about how we're going to trade it moving forward. There's nothing to be concerned about. It's just a matter of recognizing what the drivers of the market are and where you need to be. What was the driver of at least 2021 for the first half may not be the leadership group. Could be the leadership group by the end of the year. We're not that smart. So we're gonna plan out a strategy, and we're gonna stick to it. We had one going into the new trading year, lots of cash, keep an open mind, expect volatility. We're there. That's exactly what we're seeing. We're gonna do some chart requests as well. So let's get to it. Let's go to the opening futures action. And I'm going to kick things off with the dollar because the dollar matters quite a bit. This is not an accurate quote up here. It's showing it's down over a half percentage point. That is inaccurate. That is not updated. We'll update in about 15 minutes. So the dollar is essentially flat from where we closed out on Friday. We're going to talk more about the dollar in a moment. Since we're talking about the dollar, we want to look at commodities. What are commodities doing? Let's go with gold first. Gold down. I just had an alert fire off. A gold potential short squeeze alert. Let's move on to silver. First off, let's go to comments. Say hello to people. Jeff, what's up, brother? Donnie, howdy to you too. Falcon, hey, brother. Franklin, evening, Bob. Let's get ready for a new trading week. Yep, absolutely. Absolutely. Bob, I hope your family's recovered. Yeah, I think we're on the mend here quite a bit, a lot better. Thank you very much. Any idea on Sava? We'll take a look at it for you. Let me make notes to myself. Okay, who else do we have on? Larry. Jeff Gunlack still bearish on U.S. dollar because the fiscal debt and trade balance. He likes gold, silver, emerging markets, ETFs. It's so funny. I'm in the same camp as Jeff Gunlock. I actually already have up a chart of we already went over gold, but more of the commodity complex. We're very bullish on commodities. I think that we are going to be looking at a stagflationary environment. Last week, you saw a clear-cut case for stagflation. Gold did not respond appropriately, but I think it's going to get the message really, really quick. So more to come on that, Larry. Great comment. Patrick. Hey, brother. How you doing? Good to see you. Eric. Hey, Bob. Hope you had a good weekend. I did. Interested in your take on YINN. Let me make a note. YINN. We'll take a look at it. All right. All right, let's do this. Let's go to other commodities because we're very interested in the commodity space. Soybeans down in the session, but you got to take a look at the weekly charts here. And the weekly chart is beautiful. Great week last week. Where's my chart of silver? You know what? We have corn in front of us. Let's go to corn. Corn looking good here, getting ready for a pop. Wheat moving up higher. All these agriculture names are looking very good. Corn, do corn already? Either way, it's looking good. Silver down about 1/4 percentage point. Let's take a look at equities. Now, equities obviously took it on the chin last week. I think that they're going lower this week. And the Russell 2000 down over 1/3 of a percentage point. This is a 30-minute chart. The NASDAQ 100 down over 1/4 percentage point. Let's create some alerts here. I want to know if we're putting in new weekly lows. If we put in new weekly lows, that's going to set the stage for some algorithmic selling. Let's go back to the Russell. We'll do this. We already have a new weekly low on the Russell. New weekly lows on the Russell already. Let's go to the S&P 500. No new weekly lows yet, down about just shy of a 1/4 percentage point. And we're good to go. Okay, so we're beginning the week off with the dollar flat, commodities flat, equities under pressure here with the Russell 2000 already putting in a new weekly lower low. No follow through yet on the S&P 500 or the NASDAQ, but I think it's going to happen though, and it's probably going to happen before I log off tonight. I'm more bearish on the NASDAQ 100 than I am on the overall S&P 500. And we'll talk about the whys behind that right now. So let's do it. Tommy, hey, brother. I'd like to see, Pat, I'd like to look at gold this week. Yeah, gold, I think, is setting up nicely. We have S&P 500, new weekly lower low. Didn't take long. All right, so new weekly lower lows. We're now down over 1/4 percentage point. Let's see what's going on over the NASDAQ. NASDAQ, not yet. Let's go back to the S&P 500, see how much is behind that selling. It's very early, thin volume, 15-minute chart. Not a lot behind this. Not a lot behind it. Okay. Let's talk about Tomlin. Jeff needs to have a nice fight with JPM controlling gold and silver. Good luck. Yeah, good point. Is more algorithmic trading bad or flatten the trends? Well, algorithmic trading is bad when you have indiscriminate selling, right? So If you have computers that are programmed to sell when you have a certain trigger that happens, whether it be a new weekly low on the S&P 500, or more importantly, more commonly, is a break of critical support. So if you see that and you get algorithmic selling and you have institutional selling indiscriminately, what you get are what I like to call the baguettes. Selling begets more selling. What's going to cause that? Well, you have a lot of margin debt out there, tremendous amount of margin debt. So you may go to sleep one night with no margin call, and you wake up the next morning and all of a sudden you have a margin call in your account. Why? Your own broker just lifted the minimum requirement, cash requirement for a 30% stock up to 40%, 50%, and all of a sudden you're stuck in a margin call. So this is the baguettes. So algorithmic selling, if you're in a good cash position, could provide great opportunities as long as you're in a good cash position. You don't want to be levered up in this market. Our train, hey Bob, I think the S&P 500 will take a nice dip to 458 after Powell speaks. That should set a nice rally into mid-February, perhaps. Look at PCRIX, okay. Yes, Bob, okay. PCRIX, okay. S&P's bouncing back here. Let's go to economic data from last week. And this goes to Patrick's comment earlier about gold. And I think that the markets missed this. And I think they're going to stop missing it fairly soon, because what happened last week was something that should have been very bullish for gold. And yeah, the miners rallied on Friday. The gold stocks did do well, but net on the week, they did horribly. And in the face of a declining US dollar on Friday, the gold should have done a lot better than what they did. And what I'm pointing out here as being a big stagflationary issue is, where's last week's economic data? It's gone now. Is you had non-farm payrolls, which came out last week, which came with a big miss, yet wages beat by a mile. So you have inflationary pressures on both agriculture, energy. Add to that now wage inflation, yet jobs being created are dropping like a rock. That's stagflation. So that's why you saw gold and the miners move up higher and the dollar pull back on Friday. But I think that there's a lot more potential upside on gold in the coming week and weeks. Now, going into the new trading week, we are going to have CPI come out. This is a rigged number, but we know that we can now start using it as a benchmark. You could probably take this number and double, and you'll get what exactly inflation is. Right now, we're easily in double digits on inflation. If you use the CPI as calculated back in the 1970s into the 80s, you'd have double-digit inflation. The reason why that this is so far off is that they use what you call right now owner's equivalent rent. Basically, what the Bureau of Labor Statistics does, they call up a homeowner and say, hey, listen, what do you think you can get for rent on your house? And they understate what rent inflation is, rather than going out to landlords and saying, hey, how much more are you charging for rent versus last year? That's owner equivalent rent. And that's 30% of CPI. So when they say that it's transitory, meaning that inflation is temporary, when was the last time your rent went down? It's never transitory. Your rent increase. So this is coming out this week. That's on Wednesday. Thursday, initial jobless claims. Friday, retail sales, they come out. University of Michigan sentiment surveys, important number. So more economic data coming out this coming week to pay attention to. It's going to be an important week. Now, what else is going to be important about this week is, guess what? Earnings. Earnings begin this week. Taiwan Semiconductor, they'll kick it off on, I think it's Thursday morning, Delta Airlines. And then on Friday, JP Morgan, Wells Fargo, BlackRock, Citigroup, the big money center banks, they start reporting earnings this coming week. So buckle up. It's silly season. Then that following Tuesday, I think this is Martin Luther King Day, that Monday. Goldman Sachs comes out. Bank of New York Mellon. More money center banks will be coming out. And earnings season will begin in earnest. So we will be doing a lot of earnings trades, starting quite possibly with Taiwan Semiconductor, not buying stock in advance of earnings. We'll be selling options, selling premium, just as we've done for the past several quarters, and we've done very, very well. So members, buckle up, get ready. We're heading into the busy season. And if you're not familiar with what a strangle is, an option strategy called a strangle, there's a link below. I did a video on it. Go check it out at your leisure. All right. Multiples. The Schiller PE ratio did not go down all that much last week, despite the pullback in equities. We were above 40 last week. Now we're at 39.24. What gives? Well, you had certain sectors that picked up the slack for technology. So we're still extremely expensive as measured by the Schiller PE ratio with a PE ratio of 39.24. The Buffett indicator remains strongly overvalued. We have dipped down. Last week, we were at 2.2 standard deviations beyond the historical trend. We are now 2.1 standard deviations, still very, very extended relative to the historical trend. Now, what's the reason for the sell-off last week? Look no further than bond yields. Folks, I know a lot of people, they listen to me. I don't go on YouTube and have 50,000 subscribers because I'm not just doling out stock tips of the next hot stock that you may or may not make money on. What I try to do is I try to educate people, and some people don't want to get educated. All right, and that's okay. But I'm never going to change. I'm never going to deviate from my style. My style is to tell you the whys behind the market is doing what it's doing. And until such time as these events change, the market is going to repeat what happened last week. Meaning the 10-year yield last week skyrocketed nearly 16% in 1 week. Think about it. We hit highs last week on the 10-year yield that we haven't seen since early 2020. If that continues, you're going to see pressure on big tech. You're already seeing a major sell-off in much of the high beta tech names. I'm going to go to a chart in a moment, 2 charts. But Morgan Stanley, I think, gets it. This is off of Zero Hedge this evening. Morgan Stanley central banks are increasingly comfortable pushing a more hawkish line until something pushes back. It's going to happen at some point in time. These big tech names are going to break. It could be this week, could be next week. We're not quite sure yet, but the pressure is on them. And as long as the Federal Reserve keeps pushing the line that they're going to raise rates, they're going to be aggressive, these big tech stocks are going to pull in. Did I mention that PE ratio right now is 39.24? There's plenty of room to drop. Did I mention that the Buffett indicator is strongly overvalued? There's plenty of room to revert to the mean. So pay attention here. Morgan is getting it. They understand what's going on. Now, as for our positions in the gold mining stocks, we're okay. We're happy. Yes, it was not a great week for us. It was a good Friday, but it was not a great week for us. But on Thursday night, we spoke about the US dollar and that the dollar was breaking out. And I was very, very concerned. And that Thursday was a very bearish day for the gold mining stocks. But I always like to say on Thursday nights, one day can make a big difference. What happened on Friday? The dollar got hammered. Look at where we closed on Friday afternoon relative to the highs of the week. Then you take a look at a daily chart of the US dollar. We saw a breakout point failure, also known as a bull trap, last week. Not only did we not hold support on Friday, we broke right through it like a hot knife through butter. So the dollar is in a lot of trouble. So, what does well in that environment, folks? Think about it. What does well? What does well are not the names that have been working. The ARC funds are not going to do well. They are down. This is the ARC. I like Kathy Wood. This is not a knock on Kathy Wood. It's just her space right now, and it's under a lot of pressure. So I'm not knocking Kathy Wood. I happen to like her. But this fund is 48.7% off of its highs. It peaked out back here in February of last year, nearly a year. The Genomics Fund down 54.2% from its all-time high, give or take a point, but in that ballpark. These aren't bouncing back yet. We have not seen the lows here yet. More than likely, if and when the Trip Q names break as they appear as they're going to, you're going to see more selling on these names. Why? It's because people are going to have to sell what they could sell to meet margin debt. So these are mostly 30% marginable. These names here, some of them like CRISPR aren't even marginable. So you're going to have a lot of names in these funds that are margin requirement 40, 50, even non-marginable. They're going to get sold. So be careful of stepping into these names. It's too early yet. The market hasn't sent us a signal that the time is right to get involved with the ARC funds yet. There will be a point in time in the future. I'm confident of that. May not be Q1, maybe it'll be Q2, but now is not the time, because I think we're going to see a break of the Qs. And you already saw it happen last week to names like Microsoft. I've been bearish on Microsoft. I was reluctant to short it at the end of the year last year. I was worried about it rallying back, which it did. Now what is it doing? After this rally back at the end of the year, it has since rolled over, double top. Now we've broken down to new lower lows. Microsoft looks like it's probably going to rally tomorrow. I think that rally is going to fail. We're going to be looking to short Microsoft and the rest of the triple Q names. Now, so I made the case for what does poorly when interest rates move up higher, but what does well when the dollar pulls back? Look no further, folks. It's good. They're going to do well anyway. But in particular, energy last week, this is a monthly chart, but it was only 1 week in the month so far. This is a huge rip up higher, up 10.5%. The banks, we're long to the banks. The banks already put in a new yearly high so far. So it's clear what the market is saying. The old leadership names are no longer the leadership names. Money is rotating into energy. Why? Massive underinvestment in energy over the years. Look at Europe. Even here in the United States, exploration is going to be the name of the game for a long, long while. Greta Van Doomsburg, forget about her. She's out. Even the EU now is classifying, what do you call it? Nuclear and natural gas is like green energy, whatever they classify it as. But they acknowledge that those names are not going away anywhere soon. So ta-ta Greta. Tommy, tonight Chair Powell testified in Asia. Time for more time in America. He's really talking over in Asia tonight? I think they will mess up this market and manipulate again. And metal's going to get slammed. Maybe. You got to remember one thing is that it's an election year. It's an election year. So I think that they're going to keep going down. Hey, Rick Roofing, how you doing, brother? Same to you. Same to you. It's an election year. They can't let this market fall. It'll correct, but they're gonna ride in like a white knight. Jim, Nugget trade status for Friday's put trade. I rolled it out. I rolled it out. I put it in the It's here, brother. It's in the Slack forum. I rolled it out. I rolled it out. Did you have those shares assigned to you? Or did you roll? We're going to build nuclear plants soon in Europe. Yeah, there's no doubt. And uranium, I mean, look at uranium. Well, it's off the highs of the week. Or the month, I should say. I'm surprised at this pullback. I think it goes higher. 10 a.m. American time. Oh, I see. Okay, gotcha. Thanks, Tommy. You just bought more NUGT. Yeah, I think you got it at a great price. Even if you had it assigned to you, Jim, I think you're in a good spot. Just think about selling some covered calls. That's all. Because when you take a look at gold, here's the monthly chart of gold. So gold last month broke out of a monthly bull flag setup. What are we doing so far this month? We pulled back. We did a retest of the breakout point. It's already in the books. Now, there's no guarantee that obviously we're going to hold this breakout, but it's good to see that we're retesting, we're holding. And if the dollar makes a new weekly lower low, that's going to be very bullish for gold. And here's gold on Friday. Nice bullish key reversal bar on Friday. And since we're talking about Nugget, let's bring up Nugget. I don't like the Stokes on Nugget, so I would still consider selling covered calls. If I had the shares assigned to me, I would sell some covered calls. I would keep it loose, maybe at the 48 to 48.50 strike price expiring next week. And then wait for these Stokes to begin to hook back up. And then I would look to go adding more to Nugget. Now, what else is going to do well if we get a pullback in the US dollar? Emerging markets. Emerging markets, I mean, IDA, I went over this on best stock charts for the coming week. This is Indonesia. Actually, this is the wrong stock. Where's that symbol? IDX. IDX is Indonesia. Look at this breakout on Friday. Take a look on a weekly chart. This is a beautiful setup, a beautiful breakout. You're looking for other areas? Where is that India ETF that I like so much? Here, the India Fund. Weekly view. Take a look at this. Ripping up higher, yielding 10.75%. India on fire. In a good way. And what's Vietnam doing? Vietnam on fire. These names are really beneficiaries of the supply chain away from China and into more peaceful places on the planet rather than China. India, nice people. Tom Lowe, EEM for emerging market. Yeah, you could use the EEM. I would caution against the EDC. I would caution against any one of these funds because what you want to do is you want to take a look and see what the exposure is to China, mainland China. I am of the opinion that China is an uninvestable market. I think it's the worst of the third world countries because you have the Chinese Communist Party that is your senior partner. Look at Didi. Look at Didi. If they're even trading anymore. I don't even know if they're trading anymore. Look at this stock. I said, don't touch this stock the day it went public. Look at this thing now. Alibaba. Poor Jack Ma. Look what they did to this company. This is what happens when you go into business with communists. How about Hong Kong is gone. Hong Kong is gone. That's the Chinese communists. It's never coming back. It's never coming back. It's gone. Is Tesla going to drop? We'll take a look at Tesla later on. We will be trading earnings on Tesla. Okay. What else do we want to take a look at? Commodities, weak U.S. dollar. We want to be looking at agriculture, folks. Agriculture, food. You can buy the DBA. I know Franklin's big on DBA. You could take a look at the Tetrium funds. Here, corn, monthly chart, bullish key reversal, corn going up higher. Wheat, monthly chart. Nice orderly pullback. We're off the lows of, well, 1 week in the month so far, monthly chart, but we're off the lows. I think that we're going to press up higher here on wheat. China hoarding grains. Soybeans, monthly chart. Take a look at soybeans. Monster. This is 1 week. This is a 1 week move. You got to love it. Vietnam social stock. SOPA has some interest. SOPA. Social stocks. What do you mean? It's like a social media ETF for Vietnam? Interesting. Bob, did you catch any of the Ford breakout last week? It was brought to my attention. I did not have a piece of it. No, I like Ford. I think Ford is going up higher, a little bit extended right here, right now, but I think longer term it's going up higher. I think they're doubling production of their electrical Ford F-150 vehicle. Nikola is the Chinese Tesla trying to get traction. If it's a Chinese stock, I would avoid it like the plague. Ford number 3 holding your portfolio. Good for you. And I saw some good statistics on Ford. I was looking at it earlier. Their earning growth is really phenomenal. And it's cheap. P/E ratio of 13. Here's the EPS growth for the current year, 366%. That's pretty dynamite. So I think, yeah, I think Ford is going to go up a lot higher. In fact, let's take a look at it. Our RSI in a monthly chart is 83 already. Beautiful. It's a beautiful chart. I think it's going to correct eventually, as all stocks do. But on that pullback, it's a buy. Stalling out here a little bit. But I like Ford. I think it looks really, really good. What's GM doing? How's good old Government Motors? Not horrible. Not horrible. Mohammed, hey Bob, what's your strategy for Q1? Are you going to be conservative in opening new positions? Because the strategy for Q1 is our strategy for Q4 of last year and Q3 of last year. It's going to be high cash position, doing a lot of options, premium selling. If we are in a long trade, looking to trade covered calls, it's going to be all about keeping a hedge and generating cash flow and looking at sectors that are coming into their own. The banks, energy, not so much technology. We'll trade premium. We'll sell premium on technology because it's a great place to generate high beta cash flow. But I don't want to own those stocks right now. I just don't want to be a part of them. How about Japan? The yen started to capture a bit at the end of last year. You know, you have the Japanese central bank in there. They're buying stocks. They have been for many, many years. I guess it looks okay. The path of least resistance remains higher. This is a monthly chart. No screaming buy here. Here's the Nikkei. It's consolidating. It's nothing great. Stokes are rolling over. I'm not all that hot on Japan. I mean, we're becoming Japan here as right now. So I'm not enamored with Japan right now. Green is a great agriculture stock. New management, green. Let's take a look. That's not coming up for me. May want to check that symbol. Uh, and Ford brought back its dividend. Good point. To look at Lukoil. Yeah, those Russian stocks. I'm always worried about Russian stocks because of sanctions and whatnot. Baba has a double bottom. Charlie Munger doubles down on Baba. What does she know? Hey, I love Charlie Munger, but I have a rule. I don't invest in Chinese stocks. Simple as that. It served me very, very well. I can't tell you how many times I've woken up and seen news come out of Alibaba, Didi, or any one of these stocks that trade on the New York Stock Exchange or NASDAQ. And I'm so happy I'm not involved. There's just too many other stocks out there. Why be bothered? Why need that headache for? Uh, okay. We have our spammer. We'll block you. I guess we're starting to become something because I now have a. If you ever get a solicitation from me on Instagram, it ain't me. I have people that brought to my attention. I now have fake accounts. They exactly duplicated my Instagram account, and they're reaching out to people that I follow. So it ain't me. Always ask me if it's me. Just make sure you go to my account. They always add like a dot and something else onto my name and make it look like it's me. Uh, you'll find out. Yen is my contrarian pick to the contrarian trader this week. 3 times, 3 times Hong Kong. You madman. Oh, it's Green Yard. Let's bring it up. Oh, Gree. Is that it? No, that's not it. It's not coming up. Green Yard. Maybe it's two names. No, it's not coming up. Strange. Okay, what else we got? Bob, look at BTU to catch up with the rest of the energy stocks. Peabody Energy Coal Company. Biden loves him some coal. What's this thing yielding? No yield. I think in this space, I would have to go to Arch Coal. I think it's a better performer. What else do we have? Lukoil. We already went over that one. You can get verified on Instagram if you show them that you have fake spam accounts. Oh, good point. All right, I didn't know that. So you would have a blue check. Oh, look at me. I'd be somebody special. Pat, got you. Oh, is that regarding China or Charlie Munger? Charlie Munger. What do you think of Amsterdam? I've been asked about the Amsterdam Stock Exchange, and the last time I looked, I liked it quite a bit. The gentleman who asked me about it was looking to short it, and I said, no, don't short it. That's a while ago now, and I'd have to go back and take a look. It's been a while. Was it AEX? Yeah. Yeah, it had a hell of a 2021. Now it's stalling out. Is it a short? I don't know yet. I don't know if I would short it quite yet. I mean, this is only 1 week on this monthly chart, and on the month of December, you had a bullish reversal bar. So I think it's too early to short it. Let's go to a weekly chart. It could be setting up as one. You know, if we put in a lower high and then we break down to below 75.57 and we close there on a weekly time frame, then it's a short. Yes, hit the like button. Please smash the like button. Destroy it. Make it your bitch. Casper, that was you? Okay. All right. Did you short it or do you avoid it? You're shorting it again. Okay. You answer my question. AM? All right, we'll go to AM. All right. Greenyard is a European company. Oh, I see. Okay. Gotcha. That's why it's not coming up. Will this weather warrant Boyle a buy? I like Boyle. I think natural gas, we're shipping a lot of LNG over to Europe now. Here's Cheniere. Look at this. Look at this setup here in a weekly time frame. They, you know, the market's okay, right? This is not okay. This is where money is going now. Liquid natural gas. This is where money's going. Soybeans going into the banks. Avoid these tech stocks when yields are going up higher. So Boyle, yeah, I like Boyle. 50-day cross down below the 200-day moving average last week. That's in the rearview mirror. No new monthly lows so far. Nice bullish reversal bar on the week. Not a key reversal. Didn't close at the highs, but this is a compression zone. It's getting ready for a move up higher. You know, how long does it last? Not quite sure. Stokes looking good. RSI looking good. You know, obviously, it's not great that we have the moving averages crossing below each other, but I think the macro view for natural gas is bullish. The story is changing there. What about Tesla? Did you get my message about? No, I didn't get it. You sent me a message about a one-to-one session? Email me, Robert at the Contrarian Trader. Maybe there's a problem with with the with that sign up thing, that company I use. It's like their free version. So I didn't get an alert on that. All right. What else do we have? Let's do some chart requests. Folks, we're going to give a shout out to our friends over at TrendSpider. They sponsor this segment of the show. 35% discount code below. Take advantage of it. The lowest price on the web, automated technical analysis. Jump on it. It's a time saver. You can see I have all my alerts set up here for the new trading week, and we'll add more tonight. All right. I have a bunch to go over. Let me go to my members area here. All right. Tesla. Wow, we got a bunch to go over here. Quay. All right. We already have Tesla. We're going to go over anyway. Good. Skills. Thank God I checked this, man. Skills. BEKE. LABU. Eric with Yin. I think Yin is on the, yeah, we have Yin. All right. LABU, I touched upon yesterday. We'll do it again since it's a members request. It's up in front of me now. So let's start off with LABU. I don't like it right now. Even though it's in the 20s, I think that we could still head lower on LABU. That being said, as an option seller, you know, I got to be honest with you. I'm looking at the 20 strike on LABU, maybe going out 30 days, and that could be an interesting trade, you know, because if you're selling the 20 premium and you're getting paid, I don't know what the premiums are going out 30. Let's say you're getting paid $1. Well, your basis cost, if the shares are assigned to you, are $19. So I like selling puts, naked puts. That is a bullish trade, not a bearish trade, because I'm not buying the put. So I like that trade, but I think that LABU is going lower. So this is a monthly chart. We have already taken out the lows of last month, and you have a head and shoulders setup. Left shoulder, head, right shoulder. We broke the neckline this month. So I think that we could head down here to a 20 handle, to an 18 handle on LABU before all is said and done. It could be there within the next week. It's that volatile. So allow it to come to you. The Stokes are flattening out. And I think by the end of the year, you're going to have a hell of a rally on LABU. But right now it's under a lot of pressure. Look at this break last week. We were in a consolidation. I thought that this was going to hold. It didn't do it. It broke. So that's why we always want to wait for the breakout, just so we don't get suckered in. Because if you bought before the breakout on a weekly time frame, you're sitting there with a world of hurt right now if you didn't use a stop loss order. So wait for the breakout. This is going lower, and that's okay. We like it, but we like it down here, high teens or $20 per share. Let's see. Bob, do you have Bollinger Bands set to simple or exponential? I think they're on simple. I think they're on simple. I rarely use exponential moving averages, but what I do use, what most people don't, rather than using a 2 standard deviation, I like the 3 standard deviation Bollinger Band. Uh, oh, I know what happened. I know what happened. Okay. All right, I'll take a look at it. I'll take a look at it. I know what happened. There's an email address I had set up that has been discontinued. One-to-one schedule link now working on Firefox, seems fine with Chrome. Oh, good information. Thank you. Hey, Bob, happy 2020. Thank you, Danny. Thank you, Danny. Happy 2022 to you too. The almighty Bitcoin. If CPI goes down this week, Bitcoin goes down as well. How do we get TrendSpider as a? If you're a silver or gold level member, you should have gotten an automated generated link that was sent out to you. Donnie, did you sign up for gold or silver? We'll get you set up. You should have already been set up though. What about the charts for the VIX? I hear algos are short in gap. Not quite sure on that. Not quite sure. All right. The only thing I could say about, there's a strong possibility that tomorrow morning they rally this market. Don't go chasing the rally, folks. Don't go chasing the rally. Rarely do I see a correction that ends with a rally in the morning. Normally you get an ugly sell-off and then you get a bullish reversal, and that usually marks the beginning of the end of any correction. We're not there yet. So beware of bright green futures tomorrow if they do rally it back. All right, let's take a look at what else do we have? Saba. This is not going to come up. Oh, here we go. It came up. Good. Monthly chart. Let's go to it. I like the weekly setup. It's liking these rising moving averages, which is very nice. Stokes are beginning to hook up on a monthly time frame. Very nice. Still struggling here at these moving averages. What I would do is this. Create an alert. I don't want any sensitivity. None. All right. So long entry or add. What does that mean? Well, I would like to see a pullback, and this is the automated trend line, right? So take your button, click it, boom, there's your support and resistance levels. So if we touch or bounce, I would open up a trade on Sava. And then if we break out above this resistance level here where we set our alert, I would add more to the position. So maybe we're not going to get this pullback and a retest, right? The Stokes are implying that we're not going to. It appears as though we want to go higher here in a weekly time frame. So we may have to wait for the breakout on Sava, but on that breakout, a closing breakout, you open a position and then add more on each sequential breakout. Saba's looking good here. Early stage recovery stock. I would definitely wait for the breakout or the pullback, one of the two or both. So Saba looking good. Yin. Oh boy. Oh boy. The Direxion Bull ETF for China. What can I say? All right, we're going to talk technicals. I won't allow my opinions to skew. I got to admit, it doesn't look bad. Looks like they may rally it. In fact, we broke out 2 weeks ago. We're doing a retest on a weekly time frame. Stokes are hooking up. This is probably going to rally, whether I like it or not. We've already started to rally on a daily time frame, resistance at the moving averages. If it's optionable, I would definitely be selling covered calls. Come on, mouse. It's optionable. I doubt they're very liquid, though. So I'll look to sell covered calls, generate some cash flow off of it. Do you want to enter it by selling puts? I'd be fine with that as well. But it's looking okay. I want to be bearish. I can't. We speak technically, but keep in mind you have a senior partner that's the CCP, and they are truly your senior partner. So be careful. Risk money that you could lose, 100%. You should only be invested in this. What is this? PCRIX? Is that right? Maybe I wrote that down wrong. Oh, this is the Commodity Total Return Fund. This is going up higher. This is going up. We already have a new monthly high. This is going up higher. I'm bullish on this. I'm not going to spend much time. Especially if the dollar rolls over here. Weekly chart looks good. I like it. Bullish. Tesla. I was debating about selling some naked calls on Tesla. A very rough Friday. Let's take a look at a monthly chart. We have a bearish key reversal, but this is only 1 week in the month so far. So we need to keep an open mind. We have a lot of time left in the month for the shares to recover. We have earnings that are coming up. A lot can happen here. So we don't want to base our decisions simply on a monthly chart at this point. Weekly chart, different story. We broke out last week on positive news. They had great deliveries. We had the numbers come out last Sunday night. What happened by the end of the week? Bearish reversal bar. It was priced in. Plus, the rest of the market, at least in this sector, it's overvalued. It's not in favor. So it's probably going to come under more pressure in the coming week and weeks. So that's my way of saying right now, I'm bearish on Tesla. Would I short the shares outright? No, I would not. But I would sell a naked call, maybe a credit spread, just so I have some protection. Sell a out of the money, like a 1,500 naked call, and then buy an 1,800 called. I hedge that position just so I don't get my face ripped off. That's one way to play it, but I wouldn't short the shares outright. No way. Daily chart. And if you folks could just smash that like button, it really helps me out with YouTube. I'd appreciate it so much. Thank you. Tesla daily chart broke support on Friday on volume. So your Stokes are going in the wrong direction. You want to take your crayon out. Don't be shy. Draw your trend lines on your indicators. What are they doing? What are they telling you? The indicators are telling you that momentum on Tesla is waning. It's probably going lower. May not be on Monday, but probably later on in the week, it's probably going to move lower. You may get a rally back tomorrow in an effort to try to recapture support. It's probably going to fail. So be careful here. SOPA. This is that Vietnam social media ETF, I guess. There's not a lot of data here for me to analyze. I'll go to the daily chart. It was overbought. It's pulled back nicely. I think this could be bought. Use a stop loss right under the lows of January the 6th. And that's at about $7.98. You close down below that mark, get out. Now, if you buy and you want to look to add more, I would do so on a rally up and through let's call it 9.70 and a close there. SOPA looking interesting as a long, definitely not a short. Franklin, you're welcome, Franklin. I can't believe it's 7 o'clock already. Talon, hey, brother. Big caps, please. What about Amazon? It's not a matter of being cheap or not cheap. It matters about being in favor and out of favor. So right now, the market is driven by sentiment, not valuations. So, be careful of that trap. We've been in the market for well over a year now. I've been coming on every Sunday night, say the same thing over and over again. Market's overvalued. Nobody cares. What they care about is sentiment. And what they care about is what could adversely impact your names right here. What could adversely impact your names? This. A rising 10-year yield, which is rising dramatically now. If it was just a soft limp up on the 10-year or a consolidation sideways, no big deal. The money would still be going into the Amazons, the Googles, the Microsofts. But the problem is the story is changing and the 10-year yield is moving up higher. Therefore, your attitude about these stocks, forget about their valuation. Your attitude about the future prospect for their earnings growth has got to come into question. So think about it from this perspective. What is the 10-year yield doing? Who benefits? Who doesn't benefit? Those stocks that you're pointing out there do not benefit in a rising interest rate environment. I don't make the rules. Right? They were like that when I got here. You got to start looking emerging markets if the dollar rolls over. Look at commodities, look at energy, look at the banks. That's where the bull market's going to be, at least in the first quarter, 2 quarters of 2022. Great comment, though. Thank you. All right, we did SOPA. We did Tesla, AM. Antero midstream. This looks good. This is a monthly chart. I really like this chart. The first thing that jumps out at me when I look at a chart like this is this. Higher lows. And we're consolidating very, very nicely here. Weekly chart. Big breakout last week. There's your triangle formation. We broke out The week before last, continuation move higher last week. It's a good looking chart. Daily chart. Got a little bit of resistance above here, but I think it's going up higher. I'm bullish on the shares. I think it's looking good. SKLZ. I know this name. I don't like the stock. I mean, it's getting hammered to death. You can't short it. I mean, the easy money's been made on the short. Weekly chart. I have looked at this chart before because I drew this trend line. We've broken support. So we're probably going lower on this stock. I would avoid it, but I wouldn't short it. The easy money's been made. But I do think that we're probably going to go lower. I would avoid. BEKE. KE Holdings. I like the daily chart. Let's go to a monthly chart first. Here's the automated trend line, folks. Look at how many resistance levels we are breaking out of. This is not a monthly chart. That's a monthly chart. Big sell-off. We're forming a triangle formation or a wedge formation, more of a wedge formation. Bullish reversal bar so far. Looks good. I like the month so far. Let's go to a weekly view. Weekly views looking good. We broke out last week. Watch for a retrace and a retest of last week's breakout point. And we'll keep this active for a few weeks. I like the setup here. Daily chart. Really nice breakout on Friday. Looking very good. I think it goes up higher. You may get a retest. On that retest, if you're looking to buy, that's the place to buy it. Right down here at around 19.30 per share, give or take a dime. You're welcome, Jeff. All the phony dollars, debts, go to the right place, the banks. Very true. Always do. Santa left Cole. All right, everyone. Thanks for being here. I really appreciate you being here for another splendid week. Thank you. Smash the like button if you would. Join the Contrarian Trader 14-day free trial offer, please. And what else? Oh, I forgot one for Rick Roofing. I didn't see him. Can't forget Rick. LCID. Lucid Group. Bullish reversal bar on the month. I like it. Higher lows. Broke out last week. Lucid going up higher. Well, see you Thursday, man. Everybody have a great night. Profitable trading week. Remember, watch out for these high beta tech stocks. If yields move up higher, the money's rotating into the banks, energy, commodities. If the dollar rolls over, commodities are going to rip. Then you want to look at the gold mining stocks, gold, silver. Have a great week, folks. Be well.